So, Sean, 1 year from now, I'll put you on the spot. Where are we going to be? Where's the S&P 500? We're trading at 1,025 today. You know, where are we going to be August 27th of 2010?
You know, that's a tough question. I think this fall, maybe we'll get a little bit closer in. I think you could have one of two things. I think you could see this market absolutely explode to the upside. I really do. As crazy as it's been so far, I think there's so many people out there, long-only fund manager types, pension fund manager types, who've missed this all along, that they just got to be in. That you can see this thing just, snap to the upside in a huge way. Or I think it's going to go one of two ways. I don't mean to waffle. I think you're going to get a snapper to the upside, or you could see some big calamity like a double dip. Somewhere there. I don't think it's going to be flat. That's my opinion. For the next 6 months or so.
I would agree with you. I'm long volatility, and I'm kind of my playbook says be flexible right now because I don't think there's a lot of I don't have a good playbook on direction right now. We've never been here in our lives. I've got to say, with all the financial calamities, I don't know how 6,000 banks can still survive. We've only had 75 fail this year, and to me, that we should have had probably 1,200 gone already. So. The financial mess is still cleaning up. I think it's going to drag out for years and years. We're going the route of the Japanese with the zombie banks. I mean, I see them locally here in our town. There's some publicly traded banks that are small cap that should be zero already, 2 or 3 of them, and only one has been taken over by the FDIC. The FDIC comes in and hands it to a bank that's got a okay balance sheet, gets rid of puts the bad assets into the 999 account, and they give the good assets to the good, it's the good bank, bad bank scenario. So, it is a rigged situation for sure. And, none of us have the playbook on it. So it is a difficult environment, I think, to project and predict. And I think that's part of this exercise in talking about that.
What you just hinted at, too, is I think the toughest part for guys like myself, the guys like yourself right now, is that there is a lot of suspicion of what's going on out there. Some of it's manufactured, maybe some of it's real, but the bottom line is the market is going up, and you got to be in. And despite the fact that your common sense is telling you this is nuts, and you see 25% of the volume on the New York Exchange is AIG, Fannie Mae, and Freddie Mac, and you want to hold your nose and vomit in the pail next to you, but you got to be in because you can't miss that. I mean, you're a fool if you do. So I think that's one of the toughest parts right now.
Yes.
Trying to stay along this market, despite the fact that what you see isn't what you like.